Today, the S&P closed at 6840.51, basically flat on the day, down 0.09% in a relatively quiet trading session. We've been oscillating right around this 6850 level going on 2 weeks now, as you can see here on our 15-minute candlestick chart. We've been in this larger consolidation range between the 6800 and the 6900 strike, with the largest gamma exposure concentration remaining at that 7000 strike. And as you know, if you've been following us for the last couple of months, that 7,000 strike is our target for a potential year-end rally. Zooming out to the daily candlestick chart, we can see the overall resistance a little clearer between that 6,800 and 6,900 level. We've essentially had 3 attempts now to get up towards that 6,900 strike, with the most recent attempt just a few days ago, and I think a breakout above 6,900 is likely to come next. We do have the FOMC tomorrow, so that could be a big catalyst in either direction, but likely to the upside as markets get more comfortable with an expected cut in tomorrow's announcement. If we just take a look at the options volume on SPX today, we can see there is still a positive skew in the options data. And actually, let's just zoom in here quickly to our chart and take a look at this data. Price closing at 68.40, and this is that skew that we're talking about. Almost all of the options volume is at 68.40 and above. And so clearly, market participants are skewed to the upside ahead of FOMC, especially in today's trading. And so that's what we want to see for bullish momentum leading out for the next couple of weeks.
Thanks, Anthony. This morning gave us a chance to illustrate how we use GEX for intraday trading. So in this case, we identified an opportunity with QQQ merely 22 minutes after the open, so 9:52 a.m. We saw a lot of positive GEX on QQQ visible at the 625 strike. So the way that I expressed this trade using the QQQ GEX data was to trade MNQ. Those are the NQ micro futures contracts. So I picked up a total of 9 contracts at a net cost of $25,621. So let's go over to the GEX levels chart and take a look at our time machine to see what happened right after we placed that trade. So this was a fairly fast trade. I only stayed in it 11 minutes, netting around 45 points. And you can see we had that spike almost immediately at 9. And really just a few minutes after that, I was out of the trade. QQQ did go on to give us a very proper tag of that 625 strike. A very good and clear example of GEX right at the open, basically giving us a good indication of where the market was headed. So after holding that trade for 11 minutes, ended up liquidating for a $780 profit. Let's just take a very brief look at the QQQ big picture before we move on. We do have FOMC tomorrow. But what's interesting, I noticed QQQ net GEX did increase to the positive side today, despite price really only being up a little bit on a net basis. So really looking at 628 and 630, 628 being the whole moving average and 630 being that next big GEX cluster. So this is an area of potential congestion that QQQ needs to eat through to make it up toward this 640 GEX cluster and upper Keltner channel. I think that's a very real target for tomorrow if we see the upside play out. The danger zone, in my view, is below 620. If we drop below 620, that could really open the door to 600. Bulls want to see this 620 area hold, and really even better to overcome 628 to give a shot at 640.
Thanks, Sean. Next, let's take a look at silver by taking a look at SLV, the silver ETF, up 4.67% today, closing at 55.17. Obviously, silver broke out a couple of weeks ago just below the big 50 strike. Gamma exposure at the 50 strike has been a main target for the last couple of months, and you can see it's still the largest gamma exposure concentration if you compare both positive and negative gamma exposure. However, if we flip to our net gamma exposure view, which you can see the combined view by looking at these purple bars, net gamma exposure paints a different picture, and that's why we have both views in our platform. Is basically allowing us to see the main focus of the overall trend for the market. And in this picture, you can see the net gamma exposure painting a strong performing uptrend, with the 55 strike as the largest net gamma exposure concentration, actually followed by the 60 strike. So this gives us a view into the trajectory of SLV. The options market for SLV is pouring in tons of volume, which is translating into open interest at these higher strikes. And so there could be some consolidation around this 55 strike. We were actually waiting about a week ago for a slight pullback, which really never materialized, and gamma exposure has just continued building at these higher strikes. And so similar to what we've been seeing in GLD over the past year, SLV could be on a major breakout here, trending towards the 60 strike within the next couple of months. So we'll continue to keep an eye on SLV, and we may add this to our weekly income strategy selection in addition to our GLD weekly income strategy, which you can take a look at by checking out our community Discord, link in the description below.
Thanks, Anthony. Let's take a brief look at the daily chart of the VIX. I wanted to point out a couple of points to keep in mind as we enter the FOMC announcement and press conference tomorrow. The VIX was positive again today, up just under 2% and closing just below the 17 mark. We now see substantial negative GEX clusters at both the 17 and 18 strikes. Participants are presumably active with hedging and perhaps making some bets about where the VIX goes following FOMC. But what caught my attention was that the whole moving average, which is starting to flatten out, as you can see here, it's quite some distance from where the VIX is. And I just wanted to highlight when we've seen the whole in a downward slope, but we see a VIX spike kind of at the base of that slope. We have two different occurrences to look at. We'll look at this August timeframe where we saw the VIX spike and then get crushed down the next day, essentially coming back to that line. And then you can go back to June and you see the same thing. We saw the VIX drop, and then almost at the base where this is starting to turn, we saw the VIX spike, and then we see it get crushed back to the line. So we have at least a couple of recent examples where this line continues to act as a magnet. Keep an eye on the 18 strike and what happens there if we see the VIX rise, with an eye toward this gap closing between the hull and where the VIX is.
Next, let's take a look at Robinhood. Robinhood was a high flyer earlier in the year, all the way up to about the end of September, but now returning to the top end of this larger channel and potentially at the precipice of breaking out. I think if market momentum continues to the upside into year end, Robinhood also has a good chance of breaking out back towards all-time highs. When we look at the gamma exposure data, there's quite a bit of gamma exposure at the 135 and the 140 strikes, but also a lot of positive gamma exposure all the way up to the 150 strike as well. So trading at 135.68, this actually looks like a pretty decent setup for a speculative move up towards that 150 level. The main thing we want to see is a breakout basically above 140, and we're not quite there yet, but for a speculative trade, we'd likely look at some out of the money call debit spreads in the early expirations in January, maybe the 145, 150 strikes call debit spreads targeting that January 16th expiration. We'll be looking at this in more depth to potentially add to our portfolios.
Thanks, Anthony. Let's look at AMD, which has been on a roll since the summertime, maybe more of a roller coaster since the October timeframe. But we do see after this sell-off that occurred from the late October to mid-November timeframe, we do see some positive movement. And I like the fact that the whole moving average has turned up. We're just above this key 220 GEX cluster. That's an important line in the sand in my view. And even though we see the upper dealer cluster zone at 230, the 240 and 250 GEX has my attention, especially since the GEX cluster at 250 is very close to the upper Keltner channel.
And guys, our holiday sale is live. You can get an additional $300 off our yearly portfolio manager tier subscription. Use code HOLIDAYS2025 at checkout. We do have a few spots remaining on this promo, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and strategies, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much everybody for watching, and we'll see you guys in the next video.